Welcome back to Smart Stock Sam. And if you've been with this channel, today is one of those deeply satisfying moments where I get to say three words that every analyst dreams of. We called it. Not roughly, not in the ballpark, exactly. To the dollar. If you've been wondering whether Nebius, ticker NBIS, is about to explode from here, whether the institutional setup is real, whether the short squeeze is loading, and whether next week could be the week this stock makes its next violent leg higher, you are in exactly the right place. Last week's price action did not just move. It followed our roadmap with a precision that most professional traders never see in an entire career. The stock is now resetting into what I'm calling the gift zone, and by the end of this video, you'll understand exactly why. We are going to cover the mathematical confirmation, the whale ecosystem, the pre-sold revenue backlog, the hidden short squeeze trigger, and the exact entry and target levels for next week. Let's get into it. Let's start with the confirmation, because this is where the story earns its credibility. Back on February 17th, we went on record right here on this channel saying the stock was getting dangerously overbought. The stochastic RSI was printing at 88.82, a level that historically signals exhaustion. We called for a controlled pullback into the $95 to $96 zone. Now, here is where it gets almost eerie. The stock did not pull back to 95. It did not stop at 96. It dipped to exactly $93.50, holding just cents above our hard invalidation point, before reversing and exploding straight through the $100 psychological wall that so many traders feared. Then we called what we described as a literal wall at $108 to $110. On Friday, February 20th, the stock peaked at $108.32 before pulling back. Not $109, not $111. $108.32. That is not coincidence. That is not luck. That is the power of tracking institutional levels with mathematical discipline. And it leads directly to the most important question for next week. Who is already positioned for the next leg, and how much firepower do they have? That answer starts with the largest asset manager in the history of financial markets. BlackRock, a firm that manages over $10 trillion in assets globally, was not sitting on the sidelines watching Nebius. They were quietly, methodically building one of the most aggressive position increases I have seen disclosed in the AI sector in recent memory. They went from holding roughly 24,000 shares to over 9.4 million shares. That is an increase of 39,000%. When an institution with the analytical resources, the risk models, and the global intelligence network of BlackRock moves capital at that scale into a single name, they are not making a trade. They are making a statement. They are building a structural floor, a $789 million wall of institutional conviction beneath this stock. And here is the question that should be keeping you up at night. What is the one thing BlackRock knows about the future of AI infrastructure that the average retail investor has completely missed? And what if I told you that BlackRock is not even the most interesting whale in this ecosystem? NVIDIA, the undisputed king of AI hardware, holds a strategic position in Nebius as an infrastructure partner. The company building the GPUs that power artificial intelligence is directly invested in Nebius. And now, Orbis Investment Management has just disclosed a brand new 1.5% stake. So you have the world's largest asset manager, the dominant AI chipmaker, and a sophisticated global fund all sitting on the same side of this trade. What are the odds that three institutions of this caliber are all simultaneously wrong? What would have to happen in the AI infrastructure landscape for all three of them to have made a catastrophic mistake at exactly the same time? The answer lies in the infrastructure they are backing, and the numbers behind it are almost difficult to believe. Think of Nebius as the company building the physical railroads of the AI age. Every model, every agent, every inference run has to live somewhere, computed, cooled, powered, and secured somewhere. Nebius is building that somewhere, and here is what separates this from every other infrastructure story. The tracks are already paid for before they are even laid. We are looking at a $20 billion total contracted revenue backlog. That includes a $17.4 billion agreement with Microsoft and a $3 billion deal with Meta. Not letters of intent, not soft commitments, signed contracts with two of the most aggressive capital deployers in technology. Management is targeting annual recurring revenue of $7 to $9 billion by 2026, with revenues projected to grow 59-fold by 2029. They are deploying between $16 and $20 billion in capital expenditure to build out 16 data center sites across Europe, positioning Nebius to become the dominant backbone of European AI compute. But here is where the story takes a strategic turn that Wall Street has not fully processed yet. Nebius just acquired Tavaly, an agentic search provider, for $275 million. On the surface, this looks standard, but look deeper and you will see what management is actually doing. This single move transforms Nebius from a hardware renter, which typically earns compressed valuation multiples, into a sticky AI software platform. Once an enterprise client integrates into a software ecosystem, once their workflows and agents are built on top of your infrastructure, switching becomes prohibitive. They do not leave. That recurring high-margin, locked-in revenue is precisely why software businesses command dramatically higher premiums than hardware businesses. This acquisition alone justifies a significantly higher price target, and Wall Street is only beginning to understand the implications. The analyst community, for all its resources, is frankly running behind the institutional money. The stock is currently trading around $98. The consensus analyst price target sits at $143.22, implying 46% upside from current levels. But the most aggressive and well-researched call on the street comes from Northland Securities, with a target of $211. That is over 115% of potential gain from where we sit right now. The institutions have been buying. The analysts are scrambling to catch up with their price targets. And the short sellers? They are in a very uncomfortable position, and they may not even fully realize it yet. Short interest is currently sitting at over 17% of the float. 37 million shares are held by traders actively betting that Nebius falls from here. With a days-to-cover ratio of nearly 3, this setup is a coiled spring. Any positive catalyst, a capacity expansion announcement, official closing of the Tavaly deal, an analyst upgrade, even a broader AI tailwind, could force those 37 million shares to cover simultaneously. That kind of forced buying on thin liquidity does not produce a gentle rally. It produces the kind of violent, fast-moving squeeze that turns a 10% move into a 30% move before most people even realize what happened. The shorts are trapped, the whales know it, and the options market is already pricing in the pressure. Look at the put-to-call ratio. It is sitting at a bullish 0.47. Traders are buying nearly twice as many calls as puts. We are seeing enormous open interest building at the $100 and $110 strikes. Smart money is positioning aggressively for a reclaim of triple digits. And it is happening right now in real time, whether the broader market notices or not. So where exactly do we enter? Following Friday's 9% correction, price has reset beautifully into a high-probability accumulation zone. We are looking to build positions between $96.50 and $98 even. This area aligns with the 50-day moving average and the current pivot point. After the run this stock has already produced, getting a second opportunity to enter with full institutional backing at these prices is genuinely rare. That is the gift zone. And gifts in the stock market have a very short expiration date. We always protect the downside first. Major support sits at $96.18. Hard support sits near the 200-day moving average at approximately $95.25. Our absolute line in the sand, the stop loss that invalidates the entire bull flag setup, is $93.28 on a daily closing basis. If we breach that level on a close, the thesis resets and we step aside without hesitation. Capital preservation is always the first rule. The profits come second. If we hold those support levels, the path forward is clearly mapped. Our first target is reclaiming $100.87. Once we punch through that ceiling, momentum and short covering pressure should carry us directly toward our weekly target of $110.46, which aligns with key technical resistance and the heavy options open interest we have already identified. Before I deliver the final verdict, I need to be fully transparent. Everything discussed on Smart Stock Sam is strictly for informational and educational purposes only. Nothing here constitutes personalized financial advice, and I am not a licensed financial advisor or registered investment professional. Investing in individual equities carries substantial risk, including the potential loss of your entire capital. Past price accuracy does not guarantee future results. Please conduct your own research and always consult a qualified financial professional before making any investment decisions. Never allocate money you cannot afford to lose. Now, the final verdict on Nebius heading into next week. Strong buy at this consolidation level. The BlackRock floor is cemented beneath us. The Microsoft and Meta contracts are funding the build-out in real time. The Tavali acquisition is quietly reshaping the entire valuation story. The short squeeze is loaded and waiting for a single spark to ignite. And the technical setup has gifted us a second clean entry at levels that most traders are too distracted to even see right now. Reclaiming triple digits is the near-term goal. The roadmap is drawn. The levels are set. All that is left is discipline and patience. If this breakdown gave you an edge heading into the week, drop a comment below and tell me, do you think we see 120 before we ever revisit 105? I want to hear where you think this goes. If you want this level of precision every week, hit the like button and subscribe to Smart Stock Sam so you are never the last one to know. Stay disciplined, protect your capital, and I will see you in the next one.